The rally in stocks and the pullback in the US dollar tells us how traders and investors are positioned ahead of the Federal Reserve meeting. Now, the main focus for this Fed meeting is going to be the dot plot and the economic projections, because the Fed is widely expected to leave interest rates unchanged. No one expects them to lower interest rates. And for the most part, Fed Chairman Powell, his press conference is going to be ambiguous. He's going to say he's watching the situation in the Middle East is uncertain, hard to predict, and it all depends on how quickly it ends. But at the same time, he'll still express concerns about higher prices, higher inflation, higher energy costs feeding into price pressures in an environment where job growth is slowing and consumer spending is slowing. So this kind of, tug of war between inflation as well as jobs is going to keep the language of Fed Chairman Powell's press conference relatively even and probably cautious. But the rally in stocks and the sell-off in the US dollar tells me that traders are not worried. They're not worried that the Federal Reserve is going to adjust their expectations for 2026 easing by that much. Because if they were to move from one interest rate cut in 2026 to, let's say, slightly less than one or none, that would be wildly positive for the US dollar and bearish for stocks. But of course, stocks are rallying today, which means that investors think the easing and dovish bias is going to remain intact. Now, there's also zero chance that they're going to be favoring two interest rate cuts this year. It's too soon for that to happen, especially in light of the inflationary pressures. And that is also, why we're only seeing a modest pullback in the dollar and gold prices are pretty much unchanged. So for the most part, the rally in stocks as well as the slight pullback in the US dollar tells me that investors are not expecting any significant change in the dot plot or in the language in the press conference or the statements from the Federal Reserve. But the economic projections could be adjusted, where the growth forecast and the unemployment forecast probably gets notched down, and the inflation forecast gets increased a bit. And I think those are going to be the main takeaways from the Fed rate decision. I would not be surprised if this led to just kind of consolidation, little volatility, as the market kind of has a hard time figuring out what all this means. But of course, Federal rate decisions, Reserve rate decisions are always big event for the markets. So I would just wait to see how all of it plays out, wait to see what the takeaways are, and then trade after the Fed announcement. That's my best tip for you. I'm Kathleen Lee with BK Traders.